They pull back, they go into accumulation. Got to get my money, that's why I'm here today. They hang around. They push down and do not take out the previous level. That forms the W formation. Your entry is on a close. Confirmed. I'll talk about the variations on the theme in the candle. Your entry is here. The first target is the high of the day. Okay. Think about this for a minute. If the Asian channel is 45 pips, that's 50 pips right there, right? 45. If the stop hunt is 25 to 50 pips, let's just call it 75 pips. I want you to learn how to become a master at grabbing 50 pips in your sleep. Okay? And it can happen. And then the goal is to maximize your time in front of the screen to where you add contracts and you come out with the number of dollars you're looking for. Okay? So now, the trading zone, they come out in 3 swipes. They always pull off. They make some outside structure. Some structure that's lower than the current consolidation. Thank you, Paul. I've been working on my artwork. Okay? They will consolidate off of the low, away from the pin, away from it, because they have some number of people trapped down here. They do not want to release them. It's not their job to release money. Their job is to trap the money and punish the traders. Okay? So that's how this comes in. That's why it's an outside bar, an outside structure. Spike to the high, spike to the low, same thing. All right, let's look at it again from this angle. All right, accumulate all night, collect, collect, collect. All right, widen the swing, got you. 1, 2, 3 to the high. 1, 2, 3 to the high. Pull back quickly. Get off of that high. Trap the traders. Accumulate more contracts, validate the fibs, validate all the extension patterns. Anybody that got it right going short, we got to take you out and scratch you out of that. Sorry about your luck. 25 to 50 pips out of the last quarter, 1/3 of the blue box. Okay? That's how the trading zone is set. The entire business is how they handle the initial high and low, and the high and low of the day is the entire business. That's it. That's the whole business in a nutshell. Thanks, Dave. The fast move in Forex is fake because they're saving their money. They're doing it on light volume. They're flashing the pairs. So when it spikes out really quick, what you thought once before was momentum is actually the first leg of the stop hunt. The aggressive moves in this zone is to keep you confused about what direction, and the ones that got it right to stop them and shake them out and take their money. That's the nature of the beast. That's what they do. Okay? Your job is to take trades near the low of the day and the high of the day. That's it. That's your job. So with that job in mind, okay, here's a box that's blown out. Okay, coming out of the London session, there's the spike to the low. Bam, they come back 2 bars for railroad tracks. Either one of these entries is acceptable. They come back again and form up the second leg of the W. This is level 1 consolidation. See the pins? Hit the stops, hit the stops, hit the stops, hit the stops, rise. Hit the stops, rise again, change the pin to the top side and snag everybody. By the way, this is what I mean. This would have been the initial high of the day candle, or the secondary high rather when it's cut. This would have been the high of the day, right? The second bar comes in and takes out the high, but closes all the way down here, right? That's where it closed. That's railroad tracks to the high, where the second leg takes out the first. But if you know anything about candles, which I'm going to cover, when they spike to the high like that, they quickly snatch the market away from the higher level longs and send them into a tizzy or a panic. I don't know where I got this tizzy word from. My wife said it to me the other day, and it's stuck in my head now. I hate it. Sorry about that. They send you into a panic, right? You notice 2 bars is straight drop. Actually, 4 bars, 1 hour of straight drop. That 1 hour straight drop, if you were long, sucks for you. You're freaking out right now. You're moving your stop. You're telling your wife to put on CNBC. You're trying to figure it out, right? Think about what they do. If you are long, they end the day back in consolidation, and you almost get out on either one of these two passes, but not quite turn a profit, and you tell yourself, I hate to lose money on this. I'll hold it overnight, see what happens tomorrow. Right? That's the old way you trade. That's over with now. The new way is to understand that the high of the day, you take a short in here, and in 3 bars you're out of the watermark on a spike to the 50 EMA. And if you didn't book your profit on the first pass, you got one more chance. Most of the time, market makers will repeat the level on a near miss. Our group knows to take that or to book a profit if you're in the other way. Okay? That's what I want you to start to understand. All right, here it is again. Here's your vector to the high, right? Pulsation to the high. It happened to be 2 railroad tracks to the mayonnaise. What's kind of cool about that is that the traders that take the moving average cross or break plus a close are now long. But we know it's the high of the day, and we know that they snagged a bunch of traders on this railroad track right here. Right? Then what do? They pull off, and they go into consolidation for about an hour. That consolidation keeps the retail traders hopeful. Right? Think about it for a minute. You've been in a trade, you're down 15, 20 pips, 25 pips. You go, oh, it's holding that level there, man. That's support from February 07. It ought to hold and bounce and continue on back up past the 200. Think of the mentality. That's also a rally-based drop, rally-based rise, whatever the hell that thing is. Rallies up, bases out, and rises up again. Some stupid textbook term, I can't remember. It's not important. What's going on here is people are calculating this in their little heads, and they're already planning on where they're going to take their wife. Right? They're projecting this move, and we know that it's BS. We know that it's not going to play out like that, and that they will correct off of the high of the day once it's established. And you know the trade is good because they pulled off and went into extended consolidation to hold the level. How long do they work these levels? 30 to 90 minutes. The 30-minute anomaly is this, railroad tracks. The 30-minute anomaly is 15 up to the high, 15 away. They spike it in 15 minutes, and they immediately get out of there in 15 minutes. That's where the 30 minutes comes in. But an ideal high setup is 90 minutes to about 2 hours. I could tell you that in the pound crosses, railroad tracks occur most often. The volume, for some reason, they must trap quickly in the pound crosses and get out of there. Okay? So here's what happens. You have your drop. This is the no trade zone, especially for the newbies. Okay? You should be in your trade and up, and you should be in profit like right here in 10 minutes. It's over. I'm exaggerating. An hour or so, you're out. No nursing. The trade goes into profit immediately. When you catch the trade at this hammer, let me toggle. When you catch the trade at this hammer or this railroad track, they shift the zone right here and go into consolidation and then shift it again. You're up in profit the whole time they're consolidating. Depending on the spread, +5, -1, +7, you're in consolidation. Somewhere in here, you're out. You got your +50 for the day. If you want to hold it, that's okay. The exit is the reverse signal after 3 levels of drop. You're not always going to get 3 levels intraday. Understand that. But now, look. Take these 2 pieces. That structure right there, right? That's as an outside bar, those 2 pieces together. If I put it on a 30-minute chart, those 2 would be together. That's an outside bar spiked to the low. Notice something else too. When they hit the low again, you have your 3 hits to the low. This happens to come in at 9:45, and you have your consolidation to start the session above the low of the day that's established. right? It's safe to enter anywhere in here. The better entry is when they make the pass towards the second leg and fail to take it out. I'll cover the times on the boxes. Just enjoy the concepts right now. Don't worry, Robert. I got you, man. The trade is counter to the market maker trend. So the first target is the watermark, 50 EMA. Look to take between 30 and 50 pips on a counter to the market maker trend trade. Can it go for more? Of course. But you are counter his setup. If you're in A1 or V1, which I will cover, I'd rather you not counter for the day. Okay? Understanding the cycle, A1, V1 is a do not counter. Because the straightaway trade occurs most often here. Alright? Hope you guys are seeing this. Okay. Trading zone again. This is exactly an example of 3 hits to the high where you would have scratched out, and that's okay. But when they hit it again and didn't break it, you got something solid. Okay? The only thing I don't like about it is 2 hits are in one session, and the third hit is coming into the U.S. session. I like to see the hits spread out over 2 sessions. That is way more powerful because that means they accumulated for a while. But look at all this accumulation, right? Look what you got. Here's the high. You got your pushes up. 3 swipes at the high. This is variation on the theme. Okay, now, they hit it. They trade off of the high for hours. They come near it, but don't take it out. Notice how the pins have flipped to the top side. There's no bottom side pins. That is such a huge clue, I can't tell you. Notice on this slide all the top side pins. It's very important. Why? They run the market up, snatch it away, grab some traders. Run the market up, snatch it away, grab some traders. Run the market up, snatch it away, grab some traders. But I want you to see what's happening down. Look low to the TDI. The price is staying at the same level. I'm going to talk about the TDI, don't worry. The TDI is built on the RSI. The RSI averages the closes. So what's going on here is that taking an average of the closes is plotting a falling RSI/TDI line. That is telling you that these guys are averaging lower closes. What does that mean? If they're averaging lower closes, it means they don't want to go back up to the same level, and they're closing and jamming people every time. That's what it means. Okay? That's how you read the indicator the right way. That's how you explain divergence properly. The average of the closes is off of the high of the day in this example, and it is jamming traders on each and every pass. Hang on, Terry, I'll explain it. Okay? Yes, if you go long here, you're toast. But think for a minute. Look at the technicals, how they're set up. We got a watermark trading above mayonnaise. So that means the 50 is above the 200 EMA. That's a technical long in every book. You buy the dips or the consolidation zones in a downtrend, anticipating the AB equals CD, the 1618 extension, the lightning bolt's going to strike you in the head or equals whatever, right? Those are the technicals that we've all been taught in the books. Understand? Them holding the level ensures that the retail traders pile on the wrong way, not understanding the session changeovers and the market makers' targets when they come on. Holding that level guarantees that retailers are taking it the wrong way. Now, here's a little tricky one for you. Holding that level also allows them to work the Euro odd cross, AJ cross, or anything paired with Australian. Now think for a minute. They come out of the box, they issue 3 swipes and hold a high. They hold a high for 2, 3 hours, 4 hours, almost half a session, 4 hours. Holding the high does 2 things. Tricks the hell out of the retailers, induces longs, and allows them to correct an Australian cross on the backside when nobody's looking. This setup signals to you that there is opportunity in the Australian crosses. Understand? If they extend the high and hold the level, the opportunity presents in Euro odd, AJ, no, not Applejacks, Australian JPY. Anything crossed with AUD. Look on the big board, there's tons. Think about